Hello, everyone, and welcome to another edition of Sustaining Sustainability. I'm your host, CB Bhattacharya, Professor and Director of the Center for Sustainable Business at the University of Pittsburgh. This week, I'm very happy to say that I'm joined by Vanessa De La Ossa, Vice President of Sustainable Finance at ING America. ING Americas is the brand name of ING's wholesale business in the Americas region, and a part of the ING Group, a global financial services company of Dutch origin with a network spanning 40 countries. ING has more than 53,000 employees, helping its 38.6 million customers manage their money and meet financial goals. ING Americas offers a full array of wholesale financial products, such as commercial lending, corporate finance, and a full range of financial markets, products, and services. We've invited Ms. De La Ossa to join us this week to discuss a relatively new field in the finance industry known as sustainable finance, the importance of this new field for businesses and the environment, and ING's terra approach to sustainable business strategy. Vanessa, welcome to the show.
Thank you, CB. Very excited to be here, and I'm honored to be joining such a great lineup of guests that you've had on the show, including a number of guests that I noticed that have tapped into the sustainable finance market, such as Google, Verizon, Unilever, and Enel.
Sure. So to jump right into our topic for today, what is sustainable finance? Is it an oxymoron? What sets it apart from the general field of finance?
In a nutshell, sustainable finance brings access to capital to green and sustainability projects that have a positive and environmental impact in our society and in the environment. What are green and social projects? So these are defined by a set of principles that are developed by the International Capital Markets Association, also known as ICMA. And some examples of green projects are those that address areas such as climate change, clean transportation, pollution prevention and control, renewable energy on the environmental side. And on the social side, think of topics like socioeconomic advancement and empowerment, food security, and access to essential services. On the social side, these are usually tied to a specific target group. So, think of minorities or women or the underserved or unemployed. And compared to traditional finance, sustainable finance not only considers the financial risk and return, it also takes the environmental and social elements into account and when you're assessing a company's long-term performance. And to that end, in order to meet the ambitious goals that we have, net zero emission commitments, Paris Agreement goals, significant investment is needed in sustainable finance and in these projects. Just to highlight, some of the benefits of sustainable finance include increasing visibility to a company's sustainability strategy and the activities that are relevant to stakeholders such as investors, employees, and customers. There's driving a higher investor demand, which could lead to a pricing incentive and a lower cost of capital for many corporates. As inherently, if there's a more demand than supply, which is currently, the status of the market, this could lead to a lower pricing. So as, taking part in ING's sustainable finance team, our main role is supporting our clients to transition to a low carbon society and bringing sustainable finance solutions in order to enable them to have more sustainable businesses.
That's great. But then what should we expect in terms of changes for the society and the environment as sustainable finance becomes more prevalent in financial institutions and businesses worldwide?
Yes, well, in my opinion, the sky's the limit. Change is needed, and that's been evident, and change is happening. And this is just the tip of the iceberg. Currently, the sustainable finance market has surpassed the $2.5 trillion mark. And since 2017, when the market started to have more traction, it has grown at an average rate of close to 50%. This growth is driven by the increased awareness for change, companies, being more accountable. Sustainability is now on the agenda of many corporates today, and in the increased demand in socially responsible investments that are driving the market. Seeing this growth is giving us confidence that companies are pivoting and becoming more intentional, not only in establishing sustainability strategies, but in taking concrete actions and seeking investments and making these public. So, I would say that one thing that we're seeing is that 1 to 2 years ago, our team was the one that was, seeking meetings where we would introduce sustainable finance. And many clients, especially here in the US, were not interested at the time or didn't think that they could play in the market. And now it's the opposite. Now we're getting so many requests and we're inundated, which is really exciting to see. So I definitely do think that there's going to be changes. And now we're seeing also, social being a big element of that.
So give us some specific examples of initiatives at ING that are helping to propel these changes forward thanks to sustainable finance.
Absolutely. At ING, we believe sustainable business is better business. And that's why sustainability is part of every conversation that we have with our clients. I'll point out one example that we're particularly proud of. 2017, ING worked with healthcare technology company Philips to bring the first sustainability improvement loan to the syndicated loan market, where the pricing was linked to the company's ESG rating. The rating takes into account environmental, social, and governance elements. So this was a very innovative concept that tied sustainability performance to specific sustainability targets. So it's looking at the overall company's performance, not projects, when the market was born, it was just more for green bonds and green loans. And you would have to, look at specific projects such as renewable energy for a utilities company. But now companies as a whole can set sustainability strategies and specific targets that they would then, meet with these facilities. So today, again, this market, wasn't around before 2017. And today, sustainability linked loans account for 15% of the market, close to 360 billion, and has become a very attractive option for clients for three main reasons. It provides the flexibility because the funds can be used for general corporate purposes. 2, it incentivizes sustainability performance, rewarding companies with a margin discount if these sustainability targets are met. Just one thing to note that, there could also a penalty could apply if you don't meet the targets. And 3, this structure can be easily added as an amendment to a company's syndicated facilities. So a current facility is just, ING will walk you through that process. So, and then a similar concept is now being introduced in the bond market, which is opening the door to many sectors that have been underserved. So that's one way, from a product point of view that ING has contributed to the market. Other ways that we are driving change is with our clients by facilitating collaboration among internal teams. So this means bringing together treasury and finance teams with sustainability or, say, supply chain or product development teams. These teams in the past maybe have not worked together, not even met before, but now we're bringing them together. And this is really exciting because, everybody meets each other and it just feels like a very collaborative, effort. So, that's another way that we are making impact with our clients and helping them think through their sustainability strategy and how they can link that to financing.
So where are you seeing the most demand from your clients? I mean, could you say who some of these clients are, for example, when it comes to the topic of sustainable finance?
So that's a really good question, especially with the growth that we're seeing in the US. As we know, the market, it started in Europe as a fairly established market there, and it's been slow to come to the US, but has been quickly developing. 2 years ago, my answer would have been very different. The market has been dominated by green bonds and green loans, and these may not have been seen, as accessible to, many corporates, only to a small number of players. But now with the innovation of new products, like the one that ING brought along in 2017, sustainability linked products are now, opening the playing field for a larger number of sectors that can participate. In the US, we have structured both sustainability linked loans, which then have led to clients also issuing green bonds. So we've done this for a water technology company and also for building solutions companies, so large multinationals. So definitely, yes, we have worked with many clients on structuring these facilities. And I guess another area that I'd like to point out that we've seen growth in is social. So traditionally environmental topics have been, driving the market, but social has been emerging, and it was the largest growing segment in 2020, mainly driven by government response due to the COVID-19 pandemic. But now we're seeing that more and more companies are starting to address social topics, especially with a lot of that's been happening here in the US with Black Lives Matter and social injustice and racial inequities. I mean, we're also seeing that executive compensation is being tied to sustainability goals, the promotion of having more diversity on boards, its impact that can be, really long-term impact.
Shifting gears a bit and looking internally at ING's corporate sustainability strategy in particular, could you describe ING's Terra approach for our listeners? How did it get started, and what do you plan to achieve?
Our role is to facilitate finance in society as society looks to shift to a more sustainable future. And while we can't do it alone, collectively, the banking community can play a big role to finance change. Ourselves, at ING, we have, some ambitious environmental targets to meet by 2030, but also our own operations have been carbon neutral since 2007. So logically, the next step and the most important way that we can have impact is in financing our clients' climate transition. So by making transparent choices about how, where, and with whom we do business. ING was the first bank in the world to apply climate alignment methodologies to a lending portfolio and publicly report our progress. And this is how Terra was born. So Terra is steering ING's lending portfolio of about 700 billion euros in line with the well below 2-degree goal of the Paris Climate Agreement. And we're doing this by focusing on the 9 sectors that are most responsible for climate change within our lending portfolio. So some examples are fossil fuels, steel, the cement industry, aviation, automotive. There's been a development of methodologies for each sector and then goals to reach carbon neutrality for these specific sectors.
We are sadly coming towards the end of our time together. What is the most important message you want to convey to companies during this momentous era of the pandemic and everything else that's going on around us?
COVID-19 has been a challenging time for many, and there's many that are still suffering from many of the effects that have been brought on by the pandemic. And if there can be a silver lining, I mean, COVID has accelerated a call to action. There is now more heightened concern for our planet and society. But we have shown that in the past year as humans and as a society that we have the ability to adapt. Companies need to be aware that, this is not a temporary change. It's not just like a COVID only shift. And, sustainability is touching many areas of our lives and it's changing our client relationships. Consumers are more conscious of their choices and they're aligning their values to their choices. So that whether that is, driving an electric car or eating more plant-based foods. I saw, one of your guests, Panera Bread, they developed a low carbon menu. So, other restaurants are, following suit and, just increasing awareness to customers. There were many during this pandemic that adapted their services and, succeeded and some that didn't. So there's one important message is that just adaptability, keeping in mind the environment and society and that, ultimately this will hit your bottom line and it'll, this is important for shareholders as well.
And finally, then, what call to action would you make to our other listeners, the citizens out there?
I mean, like many, you may feel lost as an individual or even as a company or organization as to, what impact you can have. But, I urge the listeners to take, small steps first, maybe within your lives and maybe then bring those elements to the workplace. First, looking at internal operations, how can you lower your carbon footprint? And then how, sustainability can further be implemented into your products and services. I mean, we do have clients that come to us and they're like, well, I just provide a service. I don't manufacture anything. I don't grow anything. And, is there a space for me in sustainable finance? And we think that, there is for everyone. Financial returns alone are no longer going to be the measure of success. So environmental and social risks are also going to be increasingly more important So again, it's that's going to be ultimately the measure of long-term success for companies.
Vanessa De La Ossa, thank you so much for joining us today. It's been a pleasure talking to you.
Oh, thank you. And look forward to seeing many more podcasts from your center and, seeing a lot more of the success that you've been having so far.
And this is your host, CB Bhattacharya, saying goodbye, and we look forward to seeing you all the next edition of Sustaining Sustainability.
And before I sign off, I do want to say that this podcast is made possible by the help of my colleagues and Alyssa Martinek, who is the Sustainability Coordinator of the Center for Sustainable Business. I'm your host, CB Bhattacharya. Bye-bye.